What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 23rd of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to do a broad overview of my near-term outlook on Bitcoin going into the close of Q1 and the end of March. Not only are we going to be analyzing price action and talking about the key price levels you need to watch, but beyond that, we're going to be diving into some of the data science models we haven't talked about in a long period of time, and also talk about the macro dynamics with the ETF as well as the halving event, and what we could be watching for in regards to price catalysts and where things could be heading. But beyond all this as well, we're also going to be doing a deep dive into the altcoin space. So we're going to be talking about what opportunities we're watching for on a dip and which plays we think could really continue to outpace if Bitcoin continues forward. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking a little bit about price action, guys. First off, in the near term, our near-term target over the next, say, a week or two is to come down and test this support band, the green Luxembourg support band, which is looking to be about a 6.5 to 7 to 7.5% correction, depending on how fast things move. This is just, I think, a healthy, moderate pullback here that's to be expected and what we've seen typically throughout history. Sometimes these kind of corrections can happen practically in a day, like it did on December 11th or back here on January 3rd. Where we have these solid pullbacks in price action. And this has happened many times throughout history where we get these kind of pullbacks to the green Luxembourg support band. That would be at a minimum the range I'd be looking for if you guys are looking to continue building positions, whether that be in Bitcoin or altcoins. But this is a very near-term target. I'm going to be watching to see if we do get this pullback down to this range here, where price is going to be going from there. Because if we do get the red flip here and we send signals here that the general daily support band, which held all the way from October here to January of 2024, capturing the majority of the move here. With this being so consistent and us starting to see more red or essentially resistance band deviations essentially in the trend, this is going to be an initial sign to me that we could be expecting a nice lower price range before we really get long-term accumulators and market order flow that could really drive us higher if Bitcoin's price is to continue here. If this is going to be a full-on bull market where things really expand to new all-time highs, right? Because if that does start to play out here, if we have that setup, then we've got to get interested. We've got to start looking at the right plays and the narratives that are going to win out in that kind of period of time. But what I want to talk about here is if we don't hold that green band here and we don't hold the midline of the expanding channel here, I think we need to be more on alert here that we're going to be expecting a correction even lower than where we were back here in January. And that is essentially taking into account this expanding channel, or as some people like to call it, a megaphone. A megaphone which you blow into has kind of an expanding range on both sides. So the highs are moving higher in this case in alignment, and the lows are moving in alignment as well. We have these two lows here from January of 2024 and December 11th of 2023. And I think that there's a very good chance here that, if we essentially stop holding on this green band here, that this is going to be a distribution range, and that we're going to come down here and test this longer term line of support here, where you'd essentially get an alignment of the megaphone support range, and you'd also as well get one here of the longer term support line here right into mid-April of 2024. So this does probably lead some of you to think about the halving event, and I think that there's a fair point to be made here, irrespective if it's going to happen right at this moment, right here, right now, or if it's going to happen post-halving event, maybe somewhere between that time range. At the end of the day, I think we're at a price range here in both Bitcoin and in altcoins where a cool down is warranted here. We're not seeing altcoin dominance really spike up here when Bitcoin is starting to kind of go sideways and pull back. So I don't think we're near an altcoin cycle by any means. And that's actually, I think, good news if you guys are really like me and you're looking for those massive short-term gains in altcoins and in Bitcoin as well. I think that that is going to come down the line if this is really a bull market. But beyond that as well, we need to be very cautious here about getting caught in this kind of false belief here that just because we're seeing ETF inflows that Bitcoin has to move up, that there is just an overwhelming amount of liquidity. We kind of talked about that in the last few videos. So my main point here is essentially, if you want to know from a price action perspective. And then I want to get into some of the rationale for it, because there's data science models, there's a whole range of stuff that's going to help to kind of justify what I'm talking about. Essentially speaking, we're watching initially for a pullback here into the Luxembourg support band. If that snaps and the trend starts to flip red like it did here in January, I think this is going to be a longer term downtrend or chop range where we might even be able to come down here sometime in April. You also could have a period of time where this whips higher and continues to distribute in this range from 48 to 52K. 30K, a range in which we talked about where we expect resistance after we broke that 30K range. That was our target afterwards. But I think essentially either way, you're coming back down to this pocket. That would be the perfect accumulation range for a further longer term move. And if you really want to think about it from a pullback perspective, this is a 30% correction. And while it may sound really dramatic comparative to maybe here in the near term, I think that that is very moderate comparative to history. I mean, we can even just take a look back here. We had a 20% pullback here from July of 2023 here to September 2023 at a much lower price range than where we're at now. And if you just take a look back at previous cycle history here, we saw back here during the correction from June of 2019, even before we had the dip down here during the COVID lows. I'm not even going to go that far. You can even just see here that we had a 52% pullback from 13.6K down here to 6,500. You know, the list just goes on here. You can see that there are these kind of substantial corrections. We had this, for example, here in June of 2016, 39% pullback. Back here as well when we approached the all-time highs from December 2013 and January 2017, we saw this pull down. Excuse me, I'm going to make sure I get it from the top here. There we go. Yeah, about 36, 35%. I would say that that's a pretty moderate expectation here that we can expect. And I think what you'll see in combination with it is that you're going to have essentially the market realize and the price at its current state is overextended here. There's a lot of drum up and excitement going into the ETF. And while there's some really solid inflows here, as prices can decline here, that interest of building further inflows may stagnate for some time until we get towards a better range. It's not guaranteed to keep flowing in as it is right now. So just bear that in mind here. Market sentiment not only shifts for retail traders, but it also does for institutions as well. And until you really get towards long-term trend lines and accumulation ranges, you may continue to see that trend move down. Now I want to take a look at here at the CBBI index. Now this is something again from Colin Talks Crypto. He's one of the other people in the crypto ecosystem who I really like to follow, who's been kind of also more on the bullish side, but at the same time also keeps in a lot of the macro concerns as well. So I like a lot of his work. But one of the things I just want to talk about here, irrespective of Colin, is really this aggregator that he put together. And it's this broader analysis of a lot of the data science models that we track in the crypto market, many of which we haven't really talked about in this channel for some time, as I've been focusing a lot more on the macro for the past year. But I do still watch these indicators here, these data science models. And I think that there's something to be said here about the current score on this index. Now, bear in mind, this is weighing in a lot of different things like the pi cycle top indicator, the RUPL or NUPL, realized or unrealized profit or loss, and also the R-HODL Paul multiple, the 2-year moving average, the Trololol trend line, MVRV Z-score, the reverse risk, and the Woo-Bull top cap versus CBDD. So a whole range of the major established data science models out there in the market. And what you'll find here is this CBBI historical chart here has been really accurate at predicting cycle tops here, but also as well in helping us to spot periods of time where things might be a little bit overextended. Now, what's really interesting about this cycle here, very much in alignment here with say like 2017, right? Some people may argue that this is just going to continue building up here and we're going to be setting in our high relatively soon. This is scenario number one that I want to talk about, that essentially we may pull back to the green Lux angle support band, have a little minor pullback, but then we just really continue here going into April, where we had actually set an, ironically enough, our bull market top. This is where, again, I want you guys to consider that the halving event may be the topping event for this market. And the reason I say this is because all previous bull markets, whether you're talking about 2021, 2017, right, when you had these previous market peaks, there was usually some catalyst or buy the hype event that everyone was going into buying Bitcoin and then eventually selling at the top. And the thing is, in the previous market cycles, it was the Bitcoin futures contracts in 2017 and 2021. It was the Coinbase IPO, also the Bitcoin futures ETF, not the spot Bitcoin ETF that we have now. And now that we've had the spot Bitcoin ETF, and this clearly right now doesn't feel like the exact top, I think that the halving event is probably going to be your catalyst. A lot of people are expecting right now that we are going to see a correction going into the halving event, which is going to be scenario number 2, which we'll talk about. They're expecting this correction right now to the halving event. But what I really see when I hear people talking is people are saying, man, think about these ETF inflows, and then the halving event is going to be, we're already eating up days worth of supply with these new inflows, which is a really big misconception because someone else is selling you those Bitcoin, right? So at the end of the day, someone is offloading their positions to some extent. It's not just miners that are doing this. You're buying it from existing holders, right? Or existing people who had held Bitcoin over the years. But my point here I want to lead into is everyone's already talking about, yeah, but just imagine when the halving event comes in, how this is just going to further accelerate things. You know, this is just going to basically lead the ETF to swallowing up any existing supply from the miners and so much more, and it's just going to drive prices vertical. And I'm not here to say that that can't happen, but it certainly seems to be the narrative that everyone's touting as people are getting more and more euphoric. And what I think would be much more upsetting, which is what usually ends up happening here, is markets have become a lot more difficult to predict. I think that there's a very good chance we continue running into the halving event, buying on that anticipation, and then when the halving event actually happens, that could be your cycle top move, right? That could be where, at a minimum, you're going to expect a pretty significant correction in price. So again, I come back here to the chart here. It may be that we continue to, kind of hold up here for a while, maybe even trend a little bit higher out of the range, and then we get this kind of correction, which could very well mean that this cycle, if you want to call it that, may already have seen the majority of its move and may not have some really crazy, awesome blow-off top and altcoin cycle. That's something we need to be prepared for, guys. This has certainly not been a normal bull market, if you want to label it that. Even if we continue ascending here for the next couple of days or weeks, if we don't break new all-time highs, I got to be honest with you guys, that's not a bull market in my definition, right? A bull market needs to be breaking previous all-time highs. It needs to be surging higher. We need to have a euphoric altcoin period, if we're really going to call it that. And I think it's fair to say that you can't look at the CBBI index and other data science models and just say, oh, like, if you come down here, we have to buy it. It's the bear market bottom, but also say that when we're up here at 70 points and steadfast approaching, the 80, 90 point range, which is predicted previous cycle tops, to just turn away and ignore it and say, but the ETF and the halving event, it's a new dynamic, a new paradigm shift. You might end up getting chopped if you go that way. And I think that, again, I didn't expect the data science models to be completely fair here, guys. A big reason why, as much as we were watching these back in November 2022, I really was thinking about that dichotomy where, with the macro environment, it's a new, paradigm in this case with a recession. Bitcoin's never been through a real recession. And I was thinking that, these models are going to be broken. But at the end of the day, they've been still playing out relatively accurate here. Albeit, again, there's no exact fine print of how it all works. But generally speaking, you focus on the lower range and you take profits up here when everyone's getting euphoric. We can also take a look at the individual models themselves. The MVRV Z-score has certainly not gotten parabolic by any means, but it's at that point where either it is going to get parabolic soon, or we're seeing our kind of mid-cycle or at least temporary overbought period of time, like we saw back in July of 2019, like we saw in June of 2016, and also like we saw back here in August of 2012. So my point here is that the MVRV Z-score looks overbought. We can see here as well the 200-week moving average heat map. I like this. I love watching the spread between the 200-week, and more importantly with this model, analyzing how throughout history we spend less and less time being overextended from the 200-week. We saw back here during the move or run-up from 2012 to 2013 that we had plentiful amounts of time where we had red dots here, which again signifies a certain percentage monthly increase over the 200 weeks. So each of these dots represents a month-over-month increase or change in price. And you can see that we just had this euphoria back then. And we still had great levels of euphoria in 2017, albeit at more moderate levels in one singular move. We see here, though, in 2021, that things start to get more moderate. Things become more conservative. You have a lot more blue dots here, signifying a very small change in pace against the 200-week month-over-month. And you can see here very clearly that as we've played out through this move here, we've barely gotten away from that 200-week. And I don't think that there's anything wrong with this. It doesn't mean that Bitcoin can't be moving up more over the next few weeks. But I think this speaks to a maturing of the asset class with the launch of the ETF. And how as market cap moves higher, as we've talked about in this channel, the higher the market capitalization or value, the more liquidity and inflows it's going to require to make parabolic moves in price. And I really don't think we've got the juice here to make some absolutely parabolic run up here. And then a lot of people who may have bought the dip here, and great on them, who may have been dollar cost averaging, I think it's good to keep expectations moderate here, to not believe that things are just going to go absolutely parabolic. Another one here that I think is also good to look at is the net unrealized profit or loss or NUPO model. This again is already signaling that we're inside the belief and denial phase here. Now, if we just kind of take price off here, I want to see maybe if that'll help us kind of get a better view here. Again, majority of the move has come in here, right? This is the range of mid-range of the last, 2 cycles ago, along with that as well here in 2012 going into 2013. We saw it here as well in 2019. The question is whether or not we're at a mid-cycle range that's going to be experiencing heavy correction, or this may very well be the top here for this cycle if we come up into this range. I know a lot of people would kind of be scratching their heads and asking, why is that? And I think it's because at the end of the day, the halving event is really the last kind of catalyst or buy, the hype, sell, the news event we have. There are no new on-ramps for Bitcoin. There are no new capital entrants for Bitcoin as an asset. If people want to go out there and buy it as a corporate treasury asset, they can do that. If they want to go buy Bitcoin ETF shares with real spot Bitcoin backing them from BlackRock and Fidelity and a lot of the major financial providers, they can do that. So we got to ask, what's the next catalyst going to be here? And I understand some people might get really far in macro. They might say central banks buying Bitcoin and whatnot. And I'm not even going to sit here and say that other governments and central banks may not do that. I'm just saying here that, again, we got to see some proof in the pudding there that that's actually playing out, because all those numbers are public and we're not seeing these central banks going out and buying Bitcoin, right? So anyways, just again, take a look here as well at the Paul multiple. This is another model here showcasing again why you've got these kind of parabolic periods of time throughout history. They've gotten weaker throughout history. In fact, you can almost see a descending line of resistance on this model, and we're getting very close to where that should probably be topping out. At the same time, though, not extremely overbought. So I would say the Paul multiple above all kind of showcases that there might be a little more wiggle room here for a bit more price expansion in the near term. But my main point is that when I look across these models here, when I look at the CBBI, I'm starting to take a more cautionary approach, and I'm saying that while there's some great opportunities potentially in the altcoin space, when it comes to Bitcoin, I think the majority of the move is in, guys. There was a lot of anticipation buying around this Bitcoin ETF, and as prices are much higher than where they were, say, a year ago, you're going to require a lot more inflows to have the same kind of price expectations that people have. And it's, again, like taking a look here on Wednesday, right? We had a negative day for ETF flows with GBTC ramping up. And while that slowed down here, we got a little bit of a boost here, and the overall ETF flows around 4,800 here for this day. That's great. These are great inflow numbers. I like to see it, even considering that we had a negative day the other day, mainly due probably to Genesis offloading some Bitcoin. The main point I want to say here is that the pullback here can happen slow and steady. It doesn't have to be vicious. And it could be very well that while we don't get that pullback yet, maybe we get it after the halving event, right? Perhaps we just kind of chop sideways here in this upper range here with no real serious price expansion. No, all new all-time highs. Maybe we don't see, definitely some major breakaway towards 100K as a lot of people are expecting. That's what I want you guys to be prepared for here going into the rest of Q1 and even into Q2 as well. But I would definitely expect that this price level holds some significance, as we've seen the consistency in the highs here, that when we get a cool down, these corrections are going to get more and more painful here as we get towards this higher range here. We've made a lot of price expansion here over the past year and a half, since back here in November of 2022. I'd hate to see a lot of you who nailed that call right from the bottom, whereas we were a bit bearish at the time, and we closed our positions mainly in August 2022. So we missed some of the move here, right? And we made some good trades up here as well, along with the market momentum. But I'd hate to see you guys lose a lot of those profits you made, or if you've been in cash, buying in at the highs here and then just getting knocked out by a big downward move here when people realize that there really isn't much catalyst beyond the halving event. So again, just bear that in mind here, guys. Bitcoin's $1 trillion market cap now. It's no laughing matter, and it's not as easy for Bitcoin to go to a $2 trillion market cap as it was from 500 billion to $1 trillion. It's only going to get more difficult. Taking a look here at total, Again, I think this, again, isn't just me bashing Bitcoin here, guys. It's me pointing out a fundamental reality here that I think we're due for a near-term, short-term correction on altcoins, leading total market cap from its relative high recently of nearly right around $2 trillion down here towards $1.75 trillion, about a $250 billion pullback, which would put us, roughly where we were back here on February 11th or January 11th of 2024. Not a crazy ask, in my opinion. But again, we're going to be watching to see whether or not it holds on that 21-day moving average, because if it doesn't, then I think we could be moving it much lower, potentially even back down here towards that previous support range. Right? We can see an alignment in the ranges of resistance here. We can pull these channels over here. This would be from that range about a 25% pullback from the relative highs. So I think that, again, this is a relatively modest correction to see within valuations, nothing too crazy. And then from there, we can really reassess, where are things going from here? If this wasn't a typical bull market, and maybe we don't hit new all-time highs or don't really make any progression from that 2021 range of resistance, perhaps we don't have as massive of a correction, and Bitcoin maybe, and the crypto market as a whole, may be able to start picking up trend direction again at those valuation ranges. This might be a new base foundation. We might be reclaiming this previous range of support in the past as support once again. So again, I'm just kind of tossing out some ideas to think about here, guys. And when I look at this, I see clearly on Ethereum right now that since this recent test up to 3K, again, a continued alignment here in the range of resistance. I think, again, your next kind of potential entry point might be here, 2,600. But if that snaps, you've got a clear, nice risk-reward setup where you can set your stops, get out, and wait for lower prices on things like Ethereum. And you can see here as well, like, again, the Lux Aevo support band has been really good and resilient since back in October. So if that breaks here and Ethereum isn't catching a bid, then it's likely going to be like we saw back here, where you have more periods of time where there's red resistance bands dragging price down, an inability to establish higher lows and higher highs, and really giving us much better, more favorable entry points versus trying to buy here when everything is euphoric and Ethereum has climbed from, say, 1,100 back in November 2022 to 3,000 here. Now, if you guys want to kind of enhance your trading here, I definitely recommend you guys set up the Lux Algo indicator suite. I use the signals and overlay indicator. It's one of the main ones the Lux Algo offers here. And as you guys can see, it's really good at spotting those favorable risk reward setups in your trades, whether you're trading Bitcoin or altcoins. I definitely think that you guys should give it a check out. Down below at the link in the description, you can try 30 days risk-free. You can sign up for monthly, quarterly, or annual subscription. And again, try for 30 days. If you don't like it, you don't have to continue subscribing. But I think overall, it's a really great tool, and it's one of the few that I like to use in my trading arsenal. As you guys can see here on the charts, I like to look for good setups here when it comes to trades on using this indicator. And I like using it on the daily or weekly time frame when it comes to crypto, and on more macro markets, I look on the monthly time frame. So again, or weekly, monthly time frame for the most part. Now, there are a lot of different altcoins I just wanted to scan through, guys, again, towards building on my point here that I think we've seen the majority of the move. You can see on a lot of the alternative L1 protocols. I'm just going to run through them. Say against Bitcoin has been neutral since the beginning of the year. We can see Sui as well. A similar case scenario here, it's been neutral since January 15th. We can also see ADA or Cardano here, which is actually down significantly, around 33% from its relative highs on December 13th. We can see Optimism as well, not making any moves against Bitcoin since back in December 2023. We can see Tau as well, which has been, something that I think a lot of people have just kind of bought into the FOMO around the narrative and AI. You can see here is a little bit up from where it was back on its relative highs in December, but not making serious progression above Bitcoin from its prior highs back here without facing some chop and downward move. We're going to see how it holds on the green support band. Arbitrum, the L2 narrative looking relatively weak here. Same level it was in December of 2023. Down significantly from its relative highs back here in January. Looks overexhausted. TIA, again, another play here, right back where it was in December 15th against Bitcoin. Rune dropping all the way down here to where it was in November of 2023, hitting the resistance range we pointed out here in this channel, down quite significantly. And Astra, in this case, or Astar, basically down from around 475 sats down to 300, back where it was back in December 2023. So this is not me just trying to handpick plays. There are definitely some plays that are up in the market, many plays in which we talked about, like Render, which, mind you, when we were talking about back in January, is up practically double against Bitcoin in that window of time. In dollar terms, it's up more than double. And if you think about stacks in this case, you can take a look at the stacks Bitcoin chart. Stacks still significantly higher than where it was back, say, in January from where it was against Bitcoin. But stocks, to be honest, right now, while I like it up here, and I think it's got potential for that move if Bitcoin continues as that kind of narrative play for this cycle, I'm waiting for it to come down to that green support band, guys. This doesn't look very good in the daily time frame for me personally. And maybe there might be a trade setup where I'd be favorable, kind of ride the trend if price action starts to show it. But right now, we're facing chop at this range, right? Looks like distribution, volume's cooling down. It's not a good sign to see. So my point here is that we've got our plays here. We've got Bitcoin infrastructure plays like stacks. We're watching alternatives like Zeta Chain. There are also as well the depend plays like Render Network and some new emerging plays that are more small mid caps that might have more market to scale opportunity for growth. But I got to be honest that right now, I think there's a need for a cool down. There are better prices to be had here. And it's not me just saying that. I think the price action is saying that pretty clearly. So one thing I want to let you guys know about is that, we've talked about some of the plays to watch here. And again, great example here of the Lux Aevo support band kind of being a good buy the dip opportunity here for those strong plays like stacks. You can see, again, good risk reward setups here when price pulled back into the range. But the big thing I want to let you guys know about here is today's sponsor for the video, and that's Aevo. Now, you guys probably heard me talk about Aevo in a previous video. Aevo is essentially focused on giving you the ability to trade a whole range of different cryptocurrencies. They're aiming to be the #1 kind of derivatives decentralized exchange in the crypto space. And they not only allow you to trade spot on a whole range of different pairs or basically normal contracts at 1x leverage, but you can also do perpetual contracts and trade on leverage at higher amounts. But the big thing here is that they're having their Aevo airdrop here. So essentially you can farm Aevo by trading on the platform versus trading on other decentralized exchanges. And the big thing here that I really think is nice about Aevo, one of the biggest features they have is not only their typical perpetuals that you can trade, which again, you can trade on 1x leverage, you could trade on multiple if you want. I recommend keeping it very moderate in crypto because you increase your risk profile. But the main thing here is talking about pre-launch tokens. As new projects come up here, as the altcoin mania comes in, there are some projects baking behind the scenes that are waiting to launch their token. And one of the earliest places you're going to be able to probably trade these plays is on the pre-launch token section of Aevo's website. So I definitely recommend you guys check that out because they had a lot of different plays. For example, I know they had DYM, for example. This was a big play that a lot of people were anticipating. And the cool thing is about this is that the token had been trading for a longer period of time before the token actually launched here on February 6th. You could have bought Aevo in this case much cheaper here, especially on some of these discount opportunities, and trade it well in advance before the big move. So I think that this is definitely a really exciting thing, the fact that you can get ahead of the exchange listings and be able to find those early stage plays. I'm not saying that you need to go all in on these, but I think it's a cool feature of Aevo. And we're going to be doing a review of the Aevo platform tomorrow that I hope you guys will want to check out. So stay tuned for it. Make sure you got the bell icon set for videos on this channel. If you haven't already, consider subscribing and join the family. But thank you guys so much for giving me some time out of your day. If you haven't enjoyed this video, consider dropping a like. And again, if you guys want to check out Aevo or check out Lux Aevo, I'll have the links down below in the description. But that's it for today's video, everyone. Thank you all so much for watching, and I'll see you guys in the next video. Take care, everyone.